How do you apply for a small business loan? I'm going to tell you 3 ways you can do it, and stick with me all the way to the end, and I'll give you a bonus one that most people don't think about that can be very, very powerful. As entrepreneurs and business owners, we know that if we have a clear plan, anything becomes possible. And if you can have a clear plan, a clear process to create that plan, and a way to create clarity with your partner or spouse, you can drive to amazing heights. All right, so I started my first of 16 companies at age 19. I have built them, bought them, and unfortunately wrecked a couple of them. Sold some, and I've helped hundreds and hundreds of people. So I'm very, very familiar with this. In fact, I've even written a book on it. But the point is when it comes to startup, it has never been easier to do this. However, it takes some money. Most of the time it takes some money. I'm gonna give you 3 specific options on how you can do that. Now, first off, most people think money, borrowing, lending, they think of the bank. So let's start with the bank. Now, in the book, and we talk a lot about this, when you're considering doing your business, before you've even done it, you can build a team of advisors, a strategic team of advisors for no money that can help you vet and figure out your idea to define exactly where it is you're looking for and where you want to be. So that team of advisors is usually a great small business accountant, a great small business attorney, a great small business banker, and a great small business insurance agent. Now, the reason I put small business on there is it's important, and it's the first step when you're starting to interview and look for banks. Not all banks are the same. Now, here's the dirty little secret. Banks will take your application all day long because, candidly, it's illegal for them not to. But it may fall out of the loan you're requesting, may fall way out of the parameters of what they traditionally do. What I mean by this is that there are some banks out there that only make loans 10 million and above. The banks internally have the right to have their own loan committees and their loan structures, and they choose how they're going to make those loans. So when you start to interview a bank, one of the key things you want to do is, and in the book, we have a whole list of questions that you can ask people with this. But you want to start understanding is, how do they do small business lending? And that's why I say small business banker, because some bankers don't. Some are mortgage bankers, some are investment bankers, some only do huge loans. And usually it's the smaller local community banks that do that. And some ways that you can figure out how to do this and ask the questions before you even make the application is when you go in and say, hey, dude, help me understand, how many loans under, if you're looking for 50 grand, how many loans of 50,000 or fewer did you make last year? And if they're like, none, hey, thank you for your time, go find a bank that has. Or ask that banker, if you were in my shoes, who would you suggest I go talk to? But the first step is starting to find a bank that's going to make those types of loans, regardless of how solid your credit is or is not. And we talk a lot about that in other videos on this channel and in our courses. But start with figuring out and identifying who that banker is going to be. Once you know that, then the next step is going to be, help me understand, what is the process you go through for making a loan application? What are the types of things you need for that loan application, and what makes for a great borrower? And this is key, what is the loan process like? Who is the loan committee? Where is this going to go? Because you may be sitting, like if it's a small community bank, you may be sitting across the table from the person who makes the decision. If that's the case, that can be good. It can be bad, but it can be good. In other cases, you may say, well, yeah, we've got it, but you know what? You have to wait 2 weeks because we send it back east. Well, it's completely out of your hands then. It's a loan committee that may not understand that. So understanding the banker that you're choosing, that's the first thing that's really, really important when it comes to making those applications. The next is going to be talking and working with that banker to define what type of loan are you looking for. And just high level, 3 different types of loans. One would be a small business administration, SBA loan, which you may have extenuating circumstances, the type of business you are. Maybe you have some minority status that would empower you to have other opportunities. There may be other loans or grants in that community that are available that you didn't even know about. So start understanding, if you were in my shoes, Mr. Banker, Miss Banker, who should I be talking with? What loan should I be applying for? And start to understand that, because a great small business banker is going to work hand in glove with you because that's where they make their money, is lending money out. So they want to help you make that work. So they'll help you with that. Now you may also look at getting a line of credit that says, this is where I want to go. I have this much money, but I'd like to have $50,000 as a backup that I can use for payroll or for expenses. And then as money comes in, I'll pay that off. If I'm a little tight on money, I can dip into that, back and forth. And they can explain this to you very well. Now, I've seen line of credit work reasonably well if you can go into the bank and say, look, Miss Banker, I've been talking with potential client A over here, and they've given me a contract, this piece of paper, boop, that says, if I do this work, they will pay me this much. Fair enough. Will you, Miss Banker, loan me some of the money against that? Now it's going to depend on credit, and there's a whole bunch of different nuances in that. But it starts to make it comfortable that the bank is going to be able to pay, that they're going to get paid back. Long story short with banks, they make money when they lend it, but they hate lending it if they even remotely think they aren't going to get it back. The more comfortable you can make them feel, the easier it is for them to make the loan. This is where these are going to be the key things that you're going to start looking at when you make that loan and when you actually go through and you fill out the application for it. All right, so that's one very, very high level area from a banking, and we have other videos, like I said, but working with a banker is going to help you with this. Now, another area that is a little bit unusual, but can work really well, is if you have any vendors. So let's say hypothetically you want to start a lawn business. I don't know, lawn business. You can go in and you say, well, I need to get these pieces of equipment and this truck and this other basics just to get started. Okay, easy enough. Well, realistically, for you to go in and apply for a loan for the truck, for you to go in and apply for a loan for the equipment, that is a business loan. And those are all pretty easy to do. They're usually a little bit higher interest rate unless there's incentives. Sometimes there's great incentives, different times, who knows what it is. Again, sometimes if you have a contract, it may make things a little bit easier, may not. Now, another version, and I'm gonna be blunt, I don't recommend this, is a loan, like it or not, is a credit card. And you can apply for a credit card and use that exclusively for your business. I've done that. I opened a coffee house wine bar a long time ago. One of the dumber things I've done. It worked out well, still around, but putting all of that money on my credit cards was very, very foolish. It's a high interest rate, but it is a way of potentially getting additional funds if you need a little bit. Not a ton, but some. All right, so the three things that we've talked about are different banks. The second is going to be some sort of industry vendor, and then the third could be potentially on credit cards. Those are three different ways of doing applications to apply for business debt, and maybe use a combination of all three. Now the fourth one, the bonus, thank you for sticking around, is potentially going with your actual client, whoever you're working for. And I've seen this work more often than people think. But it could be the kind of thing where, again, we're using the lawn mowing example. And maybe you go and cut a deal with a property maintenance company, and they have 100 apartment buildings, and they would love for you to take care of that and those things. In some cases, if they know you and trust you and believe in you, you could say, hey, look, can you give me an advance for this first month? And then on that, and then we'll pay it off over the next 6 months after that. And what I'm going to do is I'm going to go buy equipment with this, so it'll make things more efficient, and I can give you a better price. But it's a way of actually sharing that risk, helping them, so you may make a little bit less money on that. But in some cases, they'll be more than happy to do that. If you're taking a heavy load off, or if you're giving them a good value, there's ways that I've seen that over and over and over and over, where people have been able to go in and say, hey, yeah, I'm a little tight right now, but if you could help me out with this to get started on these things, I'll pay you back on it, or we'll use it as a credit the first month. Now, the big key with this, if you do this, make sure you do the work off the charts. You do an amazing job. It's gonna build trust, and you'll be able to potentially if you have to do it again, you may have a partner down the long run. So ideally you found some value with this, hopefully. If you did, please subscribe, like, check some of the other videos out. And if you're interested, we have courses at aspiringsolopreneur.com and the book. Keep smiling.